Ryan from Navy Mutual, are coming to you today on this awesome Thursday to talk about life insurance and the stay at home parent slash independent contractor. Thank you for coming on, Ryan, today.
Oh, my pleasure. Thanks for having me as always. It's always a fun conversation.
Yeah, we love talking about this and learning about it, and we really appreciate Navy Mutual for educating our military community because we all need to know all the ins and outs of life insurance.
Absolutely.
All right, so we will go right into it. We've got some questions that are going to highly resonate with our military community. And so we will get lots of great information. And a lot of these questions I know military community has. So I'm excited to dive right into it.
Oh, absolutely. I'm sure there are ones I hear quite often.
Yeah, exactly. We can only ask questions, right?
Oh, yeah. It's great.
All right. Okay. So the first one is I'm a stay at home mom or independent contractor with no income. So why would I need life insurance?
We do get this one a lot. There's a reason why, even with the military, your service and group life has a component of family SGLI. And that's because you may not be bringing in income. However, you do provide for the family in ways that would then need to be outsourced that
Right.
do cost money. So there would be a financial loss to the family for the stay-at-home spouse. There was a study done, and I wish I could cite exactly where we got the information, but over 50% of military spouses are stay-at-home.
Right.
My sister is one. My grandmother was one.
Right.
So I definitely know that, how that relationship works. But keep in mind, if something happened to the stay-at-home spouse, you can't just quit your job.
Right.
Uh, you know, you can't just stop going into work.
Mhm.
So there would need to be resources available for the kids for childcare, schooling, other things I didn't even think about, transportation.
Yeah.
Maybe spouse is the one that normally gets the groceries. We all know that there's Instacarts and DoorDashes and all that these days, but that costs money, not just for the groceries.
Right.
Um, and then, private schooling was another one that I was like, oh, I didn't think about that because I didn't go to private school. And
Yeah.
so when you tally all that stuff up, it could be as much as $100,000 a
Wow.
year of
Yep.
outsourcing all that stuff.
Right. Makes
Even though
sense.
you're not bringing in income, you're
Right.
providing for the family in other ways that would need to be outsourced.
Yep.
Now, that's a little bit harder to quantify, obviously. So, you know, a lot of times the stay-at-home spouse does get a little bit lower amount of coverage just because at the end of the day, the spouse that is the primary income earner is still bringing in income. So there's a little bit less of an impact, but there is still definitely an impact. Maybe you need to do a sabbatical and take some years off, having that money available. Maybe there's a college fund that needs to be provided for. So there's a lot of different questions to ask yourself, and a lot of different ways that we can look at what's important to you and your goals if
Mhm.
something were to happen to the stay-at-home spouse or independent contractor. But there's definitely still going to be a financial impact to the family, and I would hope that based on everything I said, that kind of got the juices flowing in your brain. You could probably think of a few that I didn't even mention.
Yeah. All the hats that the stay at home parent wears.
Oh yeah, all
Yeah.
the hats, many
Provide
hats and
yeah,
coats.
many hats and coats. Yep. Right. It's true. They do so much, so much, even if they're not making, income. So
Absolutely. Absolutely. So hopefully that answers that.
yes, that did definitely. Thank you for that. All right. So the next question is, how much life insurance do I need since my family would not be losing income?
Yeah. So, I mean, we kind of touched a little bit on this, and if
Right.
we want to put a number to it, there are a couple different ways to do the financial needs analysis of, okay, how much would this cost? Multiply by X amount of years, depending on how old are the kids. Do you have a 2-year-old or a 12-year-old? Those are different. You know
Right.
what I mean?
Yeah.
I think anybody that's had daycare or paid for daycare knows that you're paying more for the younger kids than you are the older because they need more attention.
Yeah.
So a good way to do this, I use Forbes comes out with a study every year on how much it costs to raise a child. So I usually use that formula.
Mhm.
You know, 8 years ago, it was like 235 on average to get them from zero to college. So I
Wow.
round that up to 250 inflation and stuff, and just kind of keep the math
Right.
easy. So I usually look around 250 per kid. But obviously, if you have a 10-year-old, and an 8-year-old, maybe just 250 for that set since they're
Right.
halfway there. And I use a lot of squishy math. We can look at it like that for just kids, and if there are no kids, then you could look at it in a pure and simple, okay, they do this, it costs that, and then multiply by those years. Family SGLI gets you 100,000. The most common for the stay-at-home spouse with no kids is an additional 250, because young families, and maybe the mortgage is this or that and the other thing, and it's usually very affordable at the 250 mark. And then if you have kids, we can build on that, because how much would it cost to have somebody come by and cook maybe or clean, and how much would it cost to have that stuff delivered if you're not able to go out and do it yourself? Or again, maybe you want to leave yourself some room to grieve, and then maybe try to take some time off of work and have that year of income provided. So
Right.
that's very personal. It's
Yeah.
not an easy
Right.
A plus B equals C. It
Right.
depends on your goals and how you view risk. But I find 250 per kid and just 250 for the spouse is usually the right kind of formula, and it keeps things affordable still.
Okay. Good to know. Good to know. Awesome. All right. The next one is, will I need a medical exam to qualify?
This is a great question that we get a lot.
Mhm.
Navy Mutual and the industry as a whole has gotten really good at, jet or simplified issue type of products, where you get all the benefits of a fully underwritten policy without having to do a health screening exam, depending on your age and coverage amount that you're trying to get. If you're trying to get 2 million in coverage, sorry, we're going to need to do an exam. We need to make sure we check those boxes and know what kind of risk we're getting. But if
Right.
you're staying around a 500,000 to 750, there are accelerated underwriting, what it's called, available.
Okay.
And Navy Mutual's made quantum leaps in the past few years on going from fully underwriting every policy when I first started over 13 years ago, to now having a lot of options for people under 45 and 55, as they're transitioning out or starting a family in their 20s and 30s, to allow them to not only get a discounted rate where we don't charge you more for going that route, that's more convenient, but there's enough data out there and algorithms that we know what kind of risk that we're handling, which not only helps you as a member of Navy Mutual, since we're a member owned organization, but it also helps our business model not have to spend the extra money, which means we can keep our premiums low.
Yeah.
So it's kind of like one of those things where this is where technology actually wins, right?
Yep.
This is where it helps,
Exactly.
and get those members, and and spouses aside, sometimes the active duty member doesn't necessarily plan accordingly, or they get orders pretty quick, because
Right.
I've actually heard the plane in the background while they're talking to me and be like, yeah, I'm getting on the plane now. What can you do for me? And that really helps them too, be able to, help protect their family, even if they're deploying sooner than later,
Right.
which we get a lot of those calls because somebody in their unit talked to somebody in their unit, and all of a sudden they're like, oh, Navy Mutual doesn't have an exclusion like that. So that's why we're here for military families, and that's just another way we're making things a little bit more convenient. Now, that's not a promise you don't have to do a medical. So keep in
Right.
mind that there are a lot of ways to do that. But if you got some stuff going on, and it's, I don't mean a bad back or a bad knee. If there's some other things that might affect your mortality, we might need to check some boxes and get some lab work. But
Yeah.
that's all free of charge, and that comes out to you. It's supposed to be very convenient, height, weight, blood urine, blood pressure. But
Yeah.
you wake up one Saturday, you get the exam done, you go throughout your day, you don't even remember you did it.
Very convenient. Navy Mutual to the rescue.
You know it.
Love it. Okay, the next question is, what type of life insurance should I buy as an independent contractor or stay-at-home parent? What type of life insurance?
So what type? So
Yeah.
this is a trick question in my eyes. So I subscribe to kind of a balanced approach of a yin and a yang.
Okay.
If somebody calls me up and say I have kids and I'm trying to protect my income, so on and so forth, that's term all day. Term life
Yeah.
insurance is designed to take you from point A to point B, and to
Mhm.
get the max amount of coverage for the least amount of cost, but it
Okay.
also ends. So you're
Right.
never going to be younger or healthier than you are right now. So if you do
Yeah.
90% of your need on the term, to take care of those short-term needs,
Right.
it's not the worst decision to do a small whole life for those final expenses or the legacy, because if you wait 20 years or 30 years when you're older, it's just going to cost more, and it doesn't have as much time for compounding interest to work its magic.
Right.
So I always focus on the short-term need because it's usually more important if something happens tomorrow,
Mhm.
and you want to make sure it fits not only your budget but your needs. And then if there's some room left over, it definitely makes sense to kind of balance it out for your long-term needs to be met if you have the resources to take care of it. So the short answer is term. The best answer is a mix of term and permanent coverage. So that way you have coverage there when the end occurs, and you
Right.
don't have to refigure things out when you're older and maybe your health's changed.
Right.
Maybe you get a discounted rate today, but 20 years from now, you had a couple stents put in, and now you
Mhm.
would get just an average health category, which ultimately ends up costing more money in the long run when you just
Right.
took care of it when you're younger. It's kind of like everything, right?
Yeah.
We don't have money when we're younger to live, and when we're older, right, we can't do the things that we wanted to do
Yeah.
a lot of the time. You have, but in a perfect world, it's a mix, and 90-10, 90% term, 10% whole life, maybe
Okay.
75-25 if you're aggressive with wanting to leave a large legacy. Like the last guy I talked to had 5 kids. Well,
Oh,
that
wow.
legacy is gonna need a little bit more juice there on the end than
Yeah.
somebody with 1 kid.
Right.
Uh, so, that is what I would say is,
Okay.
figure out what your long-term goals are,
Right.
tackle what's in front of you because you don't know what's going to happen tomorrow.
Yeah.
So term is the most important. Whole life luxury purchase, and there's a reason affluent families have been using them for years and
Yeah.
generations. So don't sleep on it. Just know that you don't have to do all one or the other. And in a perfect world, a mix of both not only fits your budget, fits your needs, short and long term. So you get it all.
Awesome. Awesome. Alrighty. Is there a difference between the roles for stay-at-home parent and independent contractor with the type of life insurance?
Well, I mean, that again, we're talking about the financial impact to the family,
Yeah.
and what that's going to look like. So I would say yes, just on based on the independent contractor may have an income,
Right.
but is also doing the many hats, as you said earlier, of stay-at-home spouse. So
Yeah.
in that case, instead of the 250, maybe it does make sense to do the 500,000 more. And believe it or not, with life insurance, it's kind of like buying in bulk. The more coverage you get, actually, the less expensive per
Hmm.
thousand it is.
Oh,
So
wow.
let's say the $250,000 policy is $20 a month. You would
Mhm.
think 500,000 is 40, but it's probably going to end up being 35 because
Right.
you get a little bit of a discount because you're buying more coverage.
Okay.
You're still spending more, so I don't want to say
Yeah.
that it's not less expensive. It's just less
Right.
expensive per thousand. So sometimes getting that extra makes sense instead of doing a 250 and then not realizing that for a cup of coffee or two more. Next thing you know, you got double the coverage.
Yeah.
So that's why it's important to talk to somebody and one of the counselors at Navy Mutual because we'll walk you through that and we'll give you all the little life hacks when it comes to the life insurance.
That's so awesome. I love that you'll provide that resource.
Oh yeah.
All right. So the next one is, can my life insurance be a rider on my spouse's?
So there are policies out there that you can be a rider. So a lot of times riders end sooner than you want them to. Sometimes riders are charged based on the average health category. So a lot of times the riders, I would say, should only be used if for some reason there's comorbidity involved and you don't want to go through underwriting because you had a heart attack, and you're on oxygen or something extreme. But normally, if you're underwritten individually, you're usually going to get the best value and it's going to go for the time that you need it and want it. Riders are just that. They're a convenience thing to add on. They're add-ons, and they're definitely used, uh, as a selling tool. And sometimes they're needed, and they're glad they're in the industry. But the rule with Navy Mutual is everybody's underwritten individually because what if you get a rider and the policy lapse? Well, now you have both parties uninsured, or maybe you get a rider and um, you want to take the member off, but keep the spouse. Well, you can't have a
Mhm.
rider without the other policy. So they're married together, and it's hard to administrate in your household
You're
if
right.
you wanted to make those types of changes. So there's
Right.
a few reasons why. So
Yeah.
I would normally say, get your own policy.
Yeah.
I don't think Prudential, which is the administrator of SGLI, calls it I guess it is a family rider, isn't it? Yeah, it is a family rider. So it is a rider through the military with Navy Mutual. You
Okay.
know, um, spouse and spouse have their own individual policies.
Policies. Okay. Got it. Awesome. Okay. Next question is, what coverage considerations do you suggest for a stay-at-home parent?
Yeah, I suggest taking a look at your timeline and
Mhm.
taking a look at your assets and saying, okay, if something happened tomorrow, check, got it. This is how much we would probably need. But
Yeah.
what about 20 years?
Yeah.
And you go through that exercise. Something happens to me 20 years from now. I'm 42, still in the military. Kids are still in the house. Maybe I need longer coverage
Yeah.
or more coverage. Um, so it's one of those things where going through the exercise of the hypotheticals is sometimes uncovers stones of things that you didn't think about
Right.
before.
Yeah.
So, have you thought about how much coverage you need? What kind of things
Right.
do you think about? Because
Yeah.
uh, it's one of those things where I think about it every day, all day, but I can sometimes not realize that there's other things because you kind of get in the
Yeah.
zone.
Right. You're like, oh, forgot that or forgot that on one day, one day the next.
Yeah, I mean, the main consideration is what kind of impact will it have on the family financially?
Right.
And that's what you gotta ask yourself. What a lot of people don't realize is the value of a dollar is gonna change. We've seen it over the last couple years.
Yep.
So a dollar today might not have the same buying power 20 years from now.
Yeah.
Not to mention, oh, my assets are this or my assets are that. Well, what happens if there is another pandemic and the stocks dip and you
Yeah.
pass away and it's the wrong time to sell?
Right.
Or what happens if there's a housing crisis and you have all this equity in your home and then you don't?
Yeah.
Life insurance is a way to kind of blend a lot of those risks out for a low cost, considering the benefit if something were to happen.
Right.
Needs children, you know what I mean? That's
Yeah.
another thing that a lot of people, uh, plan for, and you don't think about. What happens if you have to dip into those 401ks and TSPs in 40s versus 70s? Well, if you're tapping into it early, it's going to be deleted faster. Are you going to even have enough? Even though you might have a really good start to starting those.
Yeah.
And this just allows you to have an influx of cash to kind of help with those risks. So
Okay.
I would definitely say that um, trying to figure out a way to have those discussions now and lock it in is only going to help in the future because
Yeah.
once you lock in a price with Navy Mutual, it doesn't change for
Yeah.
that designated period of time 20 years, 30 years. Even our whole life has a guaranteed premium where guaranteed won't change no matter what happened in the world or market or who's
Yeah.
president, right? Like a
Love
lot of
that.
things
Yeah.
sometimes can be affected.
That's why y'all are the best.
We like to think so.
We think y'all are. All right. Next question is, can I use my policy as a supplement to retirement savings?
I do like the word savings there.
Yeah.
Navy Mutual does have a whole life policy that has a cash value that I personally used it. I call it my Social Security Light. It's born in the 80s. You hear all these things that, Social Security won't even be there by the time I get there. And I
Yeah.
believe them sometimes. Sometimes I do. Sometimes I don't believe them.
Yeah.
The thing you got to remember about a life insurance policy and using it as a savings is it's not a dollar for dollar
Yeah.
and you're losing opportunity costs in the sense that you could earn more if you take
Hmm.
higher risk.
Okay.
So what I tell everybody that calls in is this is not a get rich quick scheme. Right?
Yeah.
We're not on TikTok telling people to put in $100 and all of a sudden they have $1 million in cash.
Right.
This is the tortoise to your hair,
Yep.
right? So this is the slow and steady that grows, and theoretically, If
Mhm.
it gets to the point where you actually need cash, yes, you can turn a whole life policy into a income stream, or you could even borrow from it tax free.
Oh,
But it takes time. I didn't
right,
start tapping into my whole life to, pay off a car or, put a down payment on a house until I had it for like 10 years.
right,
So I didn't put money into it today thinking I needed it tomorrow. So that's
right,
the first thing. This is a long game, not a short game.
right,
And I'm okay with not making an extra 20% on that money because I'm not only using a whole life policy, right? The
right,
key word there is to supplement
right.
other retirement savings.
Oh,
So max out your TSP. It's got the
mhm.
lowest cost of maintenance cost possible. Max out your Roth if you qualify, because interest earned on that is tax free. And then,
Yeah,
yeah, if you want to diversify your savings, a whole life will achieve a lot of different buckets for you as like a mini tax shelter, savings, and then that death benefit. So when the end occurs,
mm,
with Navy Mutual, there's even a chronic illness rider that allows you to tap into your death benefit prematurely to help with estate planning purposes. But
okay.
yeah, I would say that it is definitely a good alternative if you're maxing out your other stuff and you're looking for a good diversification tool. During the pandemic, my whole life was still rocking and rolling and going up, and my 401k wasn't necessarily going in that direction.
Right. Oh, awesome. Well, that was a great choice. I love that. Our last question is, what are the tax benefits of life insurance?
Yeah, this is funny that it's one of those things where you're in the industry and you don't realize people don't know this, but a death benefit is tax free. Let
Um,
me reiterate that.
the
If
tax,
you were to pass away, the
yeah,
death benefit, 500,000, 100,000, whatever, is tax free. That's why whole life is such a great tax shelter because it gives you the tax advantages on the cash and as well as to your family, when you pass. But term life insurance, using it as an income protection, as a kids' college protection, or just overall protection if something were to happen to you to kind of continue the lifestyle for your family is so impactful because again, you are putting a very small amount of dollars that are already been taxed, and it turns into a lot of dollars
yeah,
non-taxed.
right.
Um, so, keep
Huge.
that in mind that that lump sum is tax free. I mean, even the lottery's taxed, but life insurance isn't. So that death benefit is tax free. Now, the
Yeah,
premiums that you pay, again, you're using already taxed money.
right.
So, and you talk to your accountant or tax attorney if you have a company and you want your premiums written off. I'm sure there's a way to do it. I'm not a tax attorney or a tax advisor, so I couldn't tell you. And I'm sure every state's different because that's how the U.S. rolls
Yeah.
with laws.
Yeah.
but but that's the one thing to remember that death benefits are tax free, so that makes it even more important to set your family up on the right financial foot forward and
Yeah.
protect that income. If you make 100,000 a year and you got 20 years of income earning ahead of you, that's $2 million of lost income to your family.
Yeah.
That's just a very easy equation to equate it to, the human
Right.
value approach.
Right.
So those are some things to think about for sure, and remember that
Huge.
the reason why that these financial tools were developed and regulated for the masses is for those things. So we don't have families that are destitute that if they just planned a little bit
Yeah.
could have been saved.
Right. Wow, that's huge. Huge, huge. Well, thank you so much, Ryan, for coming on today. On the top left, you'll see a QR code, and if you scan that, that goes to our Mill Housing Maybe Mutual landing page, and Ryan and his team can reach out to you, and you can fill out a quick form, and they'd love to talk to you. And this education
Yeah.
and knowledge every time you come on is so beneficial. So we can't thank you all enough.
Oh, it's our pleasure. We pride ourselves on reaching the military community and having conversations with people like their people. And you will always get a live person at Navy Mutual. That's kind of what we pride ourselves from member services to beneficiary services to our counselors here on the product team. So definitely reach out if you have any questions, even if you're not ready to buy, because our whole job is to educate you. So when you are ready, you can make an educated decision based on facts, not assumptions.
Yep, I love that. So please reach out if you have questions. And I'm just reiterating, they'll reach out to you and you'll always get a live person. So thank you so much, Ryan, for being on today. I hope you have a great rest of your Thursday. And one last reminder to our Mill Housing community, we have a giveaway and it's ending today and we'll be announcing winners tomorrow. So I hope you all have a great rest of your Thursday and great weekend.
Bye,
Thank
everybody. Stay
you,
safe.